Hey everybody, Cal Ewing here from sunny Calgary, and in today's video I want to talk about a real live non-performing note deal that I've been working on. This is a Columbus, Ohio note, a first lien mortgage note. The borrower had not been paying since I think around 2017. It was sitting vacant, the house was sitting vacant, but in good condition. And the borrower owed, I think, right under 120, like 119 in unpaid principal balance plus unpaid interest since the last payment, escrow, all of that stuff. So about 120,000 owing. The value of the property was right around 190,000 as is, and I had a bid accepted. I was buying this from a hedge fund that was selling off a lot of notes at one time, and I had a bid accepted at, I think it was around 83, but if you factor in the property taxes that needed to be paid to get caught up, due diligence cost, I'd be in for around 90,000. So a $90,000 investment to buy the note, non-performing. The property's worth 190. We could collect on 120,000. So my goal, because there's quite a lot of equity in the property and it was in decent shape, was to buy the note, start foreclosure, because it looked like it had not been started according to the details I was given by the note seller. So I was going to hire an Ohio real estate attorney, get them to go through the foreclosure process, sell it off, and because there's equity there, be able to cash in and just sell it at the auction. And in Ohio, it's pretty short foreclosure time. It's under a year we could get it done, and it just seemed like a really easy deal, no-brainer kind of deal, and I wouldn't have to worry about taking ownership of the property. So as I was doing my due diligence, I started looking through the servicing notes that were provided by the servicing company that was handling that note. And as I was looking through, from the time when that hedge fund bought the note, they bought it in, I think, 2019, there were some entries in there that were saying, looks like this property was already in foreclosure or foreclosed on. And I thought that was really weird because I looked at the ownership, like the title of the property and the tax records, and it was still the same borrower on title. So I thought that was maybe something was weird with the fact that maybe a foreclosure was started earlier, but then it never went through. But then I ordered a title search on the property, or an O&E report, and it came back. One of the documents that was recovered in the title report was a foreclosure judgment. So one of the previous banks that owned that note looked pretty clear that they had gone through the foreclosure process, and there was a judgment recorded in the county records against that property. So now I'm thinking, well, what's going on? Like, am I buying a note that's already been foreclosed on? And so I emailed the hedge fund that was selling off this note, and they responded and said, yeah, we recommend you actually don't pursue this any further. Based on our notes, it looks like this property was foreclosed on. There's nothing to gain from buying this note. So was this hedge fund trying to screw me over? I don't think so, especially because they reached out immediately and said, we recommend you don't buy this note. They weren't trying to, hide it or anything. I think that they just bought a whole bunch of assets at once, and it was hard for them to see that this property had already gone into foreclosure. And so the lesson here for anyone that's buying notes, or even potentially lending on notes, like we work with a lot of investors that come in as funding partners to buy notes with us. You want to look at those title reports and just make sure there's nothing fishy, like a foreclosure document, anything that indicates the property already went into foreclosure. And it's also very important to get the servicing notes from the seller before you close on the deal. Read through all those servicing notes, because there's good information about what's happened with that note over the recent history, especially if it's non-performing. So you can see, what attempts did they make to reach out to the borrower, what has the borrower said about when they're going to be paying or why they're not paying, etc. So you can get a really good idea about the story and the background behind that particular note and property and borrower. Okay, so good thing we didn't move forward. I'm glad that we did our due diligence process and spotted this error, because it would have been a massive massive headache if we'd have bought a note that you can't even foreclose on, that's basically a worthless piece of paper for 90 grand. So hope you guys gained some value out of this, and if you're interested in talking about how you can get involved in actual good note deals, the ones that go through our due diligence process and come out as winners, reach out to me. You can contact me by booking a call at www.talkwithcalewing.com. I look forward to speaking with you And make sure you subscribe to this channel as well. If you're watching on YouTube, make sure you subscribe. I've been a little slow in posting videos during the softball season, but this summer and into the fall, there's going to be a lot more content coming to the channel. Take care.